Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of RKLB, ticker symbol RKLB. And so I wanted to follow up on last week's video after we saw this more than 17% drop on the day. I had mistakenly thought that was following earnings, but as you can see, we do have earnings coming up at the end of the month, so I do think that will be an exciting time for the stock. But it looks like prior to that day, February 1st, they had announced capital being raised, and so that is why price did drop. But I just really found that to be exciting with the chart. It had been kind of stagnating around here, right around $5, and so, I was intrigued by this big drop. And on the note of $5, I do have that marked as this purple line here. I do think that is going to be a psychological level moving forward, and I do think price might be heading in that direction. And I should note that on the day today, Thursday, February 8th, RKLB did close at a price of $4.30, being up just a few cents in the after hours, and that being at a key level right at this uptrending level of what is now resistance, but it might turn into support if we can break above and hold it. And I should note that uptrending level of resistance is actually the bottom of this parallel channel that price has resided in, which I went over in last week's video. And so I do think it's going to be pretty key for price to get above current price and hold. It does look like we got rejected over the past couple days, and I do think that those levels that it was rejected at are pretty key, which I will highlight based on some Fibonacci retracements that we can do. Also do want to note that just above the high that was hit on February 7th, that high being a price of $4.47. We can see this blue line here at $4.54.5, which was the high on December 21st, just before this gap up. So I do think that is a pretty key level. However, we did gap down and go over that gap, still, has not been filled. And so that gap down level, filling that gap, would be going to a price of $4.85. But, if we do consider these two blue lines, these two gaps, and consider the volume profile, it does look like if we are able to get to $4.50, the volume shelf that's here does kind of die down. And so if we can get to like right around $4.60, there isn't that much price action above it until we get to, really this gap fill. So I do think that price could really rocket up to, $4.85, possibly $5 if we can get and hold above $4.60. So I do think that's something to keep in mind, but also I do think it is good to keep in mind that because there was all this consolidation here, you can see this little volume lip here, there's probably going to be a good amount of sellers up there. So with that, we might bump into some resistance if price can get to around $5. So, those are my thoughts just looking at the chart and these different levels that stand out. But if we do look at Fibonacci retracements, like this yellow one, it was white last week. And so looking at this yellow one, I can add some levels that I have hidden. And so I'm going to do that so we can get some insight into where price might be going to the upside, since it seems pretty clear we're not going to the downside. Like I had suggested that might happen in last week's video, I was a little more bearish then, but since we do see this bounce, we do see some strength, I don't think $3.50 is on the table. However, that might be a level we visit around earnings, so good to be cautious, especially if we do launch up to $5 a share. There could be, a potential pullback following that. So if I do add some Fibonacci levels to this, we can see the 100% retracement from that line. That does correspond to the low that was back here. That was on, let's see, October 23rd, the low being $4. So perfectly lining up with that red line. Now with this yellow line, we have an orange line there. But then if I do go over the other retracements, we can see, I'm actually going to remove that so it doesn't get too cluttered. We can see the 786, that is at a price of $4.46. And it does look like price was rejected there just yesterday on Wednesday when we hit a high on that day of $4.47. So hitting that level perfectly, almost, and then getting a rejection. So I think that's pretty key to be thinking about. Then if we go to the next level up, the 618, that is at a price of $4.82. So right around where that gap fill would be at $4.85. So I think that's a pretty compelling level to be considering since it does line up with that gap fill. Next up, the 50% retracement is at a price of $5.07. So right around $5. I think that's pretty interesting. And I could add more levels going up, like the 382 at a price of $5.32. But I don't want to clutter the chart that much. And I do think that, of course, we have to accomplish $5 before we can get to that 382. So I'm actually going to remove that before getting on to the next retracement. And so this retracement is going from the bottom here, the low here, to the high up here. Now, since we have established a new low for this cycle, I am going to do another retracement, but from the top here to the bottom here, so we can get an idea of levels that might act as resistance. All right, and so now we can see those levels marked by the white lines, and we did have the low on February 1st of $3.89. That would be, the base of this retracement, and then moving up to the 236, that is at a price of $4.42, corresponding with the 786 retracement from the way up, as well as, the high that we saw on February 7th. So I do think that's pretty interesting. Then the next level up is the 382 at a price of $4.75, being just below the 618 from the way up, and as well as this gap fill. So I do think that they're, the confluence of all these levels there, I do think that's pretty interesting. But then the next level up, perhaps the one I'm most intrigued by, the 50% retracement at a price of $5.02, corresponding with $5 being a psychological level. So, my view is that Rocket Lab is going to go up to $5 a share. I do think that it will hit these levels. I do think it's quite possible it could go to the 618 at a price of $5.28. But getting up to those levels, I do think there is a little bit more risk that there would be a pullback, especially with earnings. So I do think this is one that we will need to revisit in a week to see where price is at. And if it is at $5, still showing strength, I do think the 618 is on the table. But, I do think at that point we could be seeing a pullback, perhaps to, revisit $4.40 or, right around current price. So, one would want to, capitalize on those gains in case there is a pullback. And one thing that I do want to note before closing the video is that the $5 level here, the purple line, does appear to correspond with these two highs over here. That was in October, and then also almost the low on September 18th, which was a low of $5.02. So I do think $5 is, it does stand out in the chart, not only based on these Fibonacci levels, not only psychologically, but we do see that, it was almost support here before the gap down, but then resistance over here does seem to also correspond with kind of this blow off top before, pulling back, and then it was, touched by the wick of this candle coming down before the rally up to $6.14. So I think $5 is a level to be paying attention to over the next couple weeks before earnings on February 27th. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.